from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Elon Musk is asking for the Twitter trial to be pushed back after a whistleblower's allegations about the company's security. And he's changing his complaint. Will that help or hurt his case? Plus, we're learning more about the early years of YouTube. For 12 years, the site was a refuge from censors and corporate overlords. It was also a sounding board for terrorists. We'll explore how the site policed extreme content and undercut terror groups like ISIS, and how well it's moderating that content today. And the pandemic changed how we live, work, and learn. More students are accessing online learning, but fewer people going to college. We'll launch our EdTech series this hour. All of that in a moment, but first let's get a look at the markets and stocks ending at the lowest level in a month. Bloomberg's Katie Greifeld here to paint the picture. Katie, walk us through the day.
Emily, it's starting to look like conviction. S&P 500 and the other big benchmarks closing in on a third straight day of losses. The S&P 500 off by more than 1%. The NASDAQ 100, your big tech, even more. It was the chips, once again, though, that led losses. That Philadelphia Semiconductor Index down by about 1.3%, again, as two-year yield, Treasury yields rose. What that means, basically, the Fed's going to keep hiking. Even the meme stocks sort of fell victim to what we saw in the broader equity market. If we look at Bed Bath and Beyond shares, they're still up over 20% over the past 3 days or so, but they did fall a little bit today. So we're going to keep an eye on that one. An important day for the company tomorrow, giving a strategic update. We did also have a few earnings stories after the bell. Earnings season truly never ends. Let's kick off with HP. Missed estimates, as you can see, shares almost down by 4% or so in the after hours. Hewlett-Packard Enterprises, they actually narrowed their full-year adjusted EPS forecast, but shares getting a little bit of a lift. And CrowdStrike, actually, estimates were pretty in line with what the company actually delivered. A little bit of a boost to shares after hours, after what was some pretty heavy selling at the index level on Tuesday. But let's end on Twitter, because I get a little bit anxious if I go too long without talking about Elon Musk. I know you guys do as well, and you're going to dig into the details of that sort of complaint that he amended a little bit. But let's just look at the discount between what the actual offer price is and what Twitter shares are actually trading at. That spread between those two prices now about $15 or so, Emily. Can't imagine Elon Musk is too thrilled when he thinks about that.
All right, Bloomberg's Katie Greifeld, thank you for that update. As Katie mentioned, Elon Musk saying the Twitter whistleblower's complaints about security and bots, yet another reason the deal should be canceled. Ann Lipton is the law school associate dean for faculty research at Tulane University. She's got an expertise in corporate governance. And Bloomberg's Kurt Wagner joining us as well. So there's a lot of back and forth here, Kurt, almost every day. What exactly happened today?
Yeah, there were a few things that happened, and both of them were things that we've seen previously, but they have since been kind of amended or updated because of the whistleblower that we talked about, Emily. The first is that Elon Musk sent another letter to Twitter yesterday saying, I'm formally walking away from the deal, and here's the reasons why. And those reasons now include more information from the whistleblower, which he didn't have when he sent the first version of that letter back in early July. And the second thing that he's doing is, he's trying to amend his counterclaims, right? So when Twitter sued him, he essentially sued the company back with his own counterclaims. And now he's trying to update those counterclaims, again, with more information that he has from the whistleblower that he didn't have the first time around. So essentially, he's putting the whistleblower very much at the center of his argument here as to why he should be able to walk away from this deal.
So, Professor Lipton, basically, as I understand it, Musk has changed his argument and is giving a completely different reason for wanting to terminate this deal. Is that correct? And does that help or hurt his chances in court?
Certainly, yes, it's correct. One of the interesting things about the whistleblower is that he actually, in a roundabout way, agrees with Twitter on the bot issue. That has been the issue that's been dominating the proceedings up until now. The whistleblower kind of says, yeah, Twitter's probably right about that particular issue that Elon Musk has been litigating, but there are all these other problems with the company: data security, FTC compliance, IP issues. So now Elon Musk is claiming that those are in fact his basis for walking away. In terms of helping or hurting him, the first question is whether the court will even allow him to bring all this stuff in now. I mean, paper discovery was supposed to end yesterday. This would require, and Musk has requested, moving the trial date back to November, reopening discovery. And so there's the first question is whether the court will even allow that. That said, I think if she does, I mean, this helps him. I think that I'm not sure that I can really evaluate the strength of Zatko's, the whistleblower's allegations, but I think they are stronger on their face than everything Musk has been litigating up until now. So, and certainly giving him more grounds to walk away rather than fewer is better for Musk.
That said, if Elon Musk signed a paper saying, I'm going to buy Twitter, no strings attached, isn't it, do all of these other issues potentially raised by the whistleblower actually matter?
Yeah, they do, but they matter in different ways because Musk actually has two separate arguments. One is contractual. It's Twitter made certain promises to me in the contract and it breached the contract, and I get to walk away for that reason. The second argument is fraud. Twitter intentionally misled me as to the condition of this company, and for that reason I get to walk away. So those are two separate arguments. On the contract one, Musk can only succeed if he is able to show that all of these allegations add up to a material adverse effect, which basically means long-term impact on Twitter's finances. The reason that's the standard for the contract claim is because that's literally in the contract. That's what it says. So if he can show that, he gets to walk away, and it doesn't matter how much diligence he did or whether he, relied on anything. That's just what the contract says. For fraud, if Musk can show that Twitter intentionally deceived him and he relied on that, then he gets to walk away for that reason. And in that case, though, his reliance is harder to establish given his sort of very public, not doing due diligence, and all of those things make it harder for him to argue he relied on anything Twitter said.
Kurt, Elon Musk is asking the judge to move the trial now from October to November. How likely is that to happen?
I actually don't know the answer to that because I'm not exactly sure how, prevalent this type of request is. I can say just based on kind of common sense, it seems to make sense that they would want a little bit more time because they just have so much more information today than they did a month ago when they decided on this trial date, right? And so I could see this happening, but again, I don't really know if that is a common thing to push a trial back by that far, especially once both sides had already worked quite aggressively to come to a week that worked for both of them.
Professor Lipton, you were nodding there. Are you thinking this trial is getting moved? And what else are you watching for?
Yeah, I don't know if it's getting moved. I think it's less about getting, the getting moved is secondary to does he get to bring in all this new stuff? And literally, she's supposed to consider justice. That's actually the standard. Is it just to allow him to reopen discovery and bring all these new claims in? On the one hand, the argument is, well, I had no idea that any of this was going on. Of course he should be allowed to. But the alternative argument is that the reason he had no idea was because he chose not to do any due diligence. A lot of the papers right now are, they're under seal. Twitter will, of course, have its own response. But so it's really hard to tell right now just how much justice is done by allowing him to basically start over.
Discovery, as we're speaking, has been ongoing. What could come to light in that process? Could there be some sort of smoking gun?
Could there? Sure. I mean, Zatko has this. It's very redacted. It's hard to say. But he's got, allegations of sort of hair-raising security deficiencies and IP deficiencies. He's got a lot of reports about internal reports to the board and internal reports to people that were ignored or covered up. And the part that's very difficult to tell from the outside is how much this is Twitter fraudulently covering up a poorly run business, which is, of course, what Musk is claiming, versus an employee who may very well feel strongly and about how the company should be run, but this is just a disagreement with an employee with management, and management gets to ultimately make those kinds of choices.
All right, thank you both for helping us work through some of these very complicated and ever more complicated issues. Tulane Law School Associate Dean for Faculty Research Ann Lipton and our very own Kurt Wagner. Appreciate it. We're also following news about potential layoffs for some of the biggest social media platforms. Snap is planning to lay off around 20% of its nearly 6,500 employees following weeks of planning, according to The Verge. Layoffs will start Wednesday. Business Insider reporting Meta is also planning to lay off hundreds of Facebook contractors in the United States. This as the company looks to source more jobs outside the States. Coming up, we'll take a deep dive into YouTube's content moderation challenges over the years and how they're not over. We'll discuss. This is Bloomberg. For years, everyone was welcome on YouTube, no matter how extreme their views. But as the social giant became one of the most visited sites on the internet, the company has consistently struggled to adjust. And some staff say kept a double standard when it came to moderating extremism on its platform. This is the subject of Mark Bergen's upcoming book, Like, Comment, Subscribe, Inside YouTube's Chaotic Rise to World Domination, and an excerpt in this week's edition of Bloomberg Business Week. Mark joining us now for more on this. So Mark, you've been working on this book for a couple of years, excited for it to finally see the light. Talk to us about what you explored in this particular excerpt when it came to how YouTube moderated content in the early days and how it changed those policies over time.
Yeah, the article begins with this scene in June of 2017 with this seminal moment in YouTube's history. If you recall, this was so 5 years ago now. They were in the midst of this unprecedented advertiser boycott. Advertisers were just pooling their money and over extremist videos. There was an attack in London, a terrorist attack where there was reportedly one of the attackers was inspired by this cleric that he watched on YouTube. And the company really reversed this position and came down hard and said, we're going to crack down on anything they said inflammatory or supremacist content, basically try to eradicate terrorism from YouTube. They did successfully do that, as I report, for Islamic terrorism and what has there's a lot of government support for that particular type of radical extremism. They had a much harder time, and it took several years for them to deal with white nationalism, a problem that's had a lot of, we've all seen, very violent outbreaks in the past few years that YouTube has had to see, in Christchurch and then in Buffalo on the internet in a really visceral and scary way. I think that if we go back to 2017 to now, YouTube has solved one part of that problem. The brand safety crisis don't really happen on YouTube anymore. There's this phenomenal growth from 2017 to now. Their ads business has grown by 20 billion. And they really have a different sort of problem right now. Their issues are more regulatory, and they're looking at their brands. They're looking at TikTok in their rearview mirror. So I certainly not a lot of their problems are solved, but the central problem that they dealt with was that they built up this phenomenal platform without a lot of the safeties and guardrails in place until 12 years into its existence.
All right. Well, we're looking to hear more revelations from your book. I know it's hitting stores next week, over the next several days and weeks. Something else you reported on today, a top YouTube executive, the head of business, who was actually the first hire from Hollywood 12 years ago, is leaving the company. Tell us about him and what his departure signals.
Yeah, Robert Kinsel is I'd say the most senior, as the longest serving senior executive at YouTube. He's been there since 2010 and has been leading their content division, which has had all these sort of fits and starts that are really interesting. At one point a few years ago, YouTube was leaning in on, they had original programs and were for their subscriber-only competitor to Netflix, Amazon Prime, and basically entering the streaming wars. They pivoted away from that entirely, dropped that program earlier this year, officially moved into Shorts, which is their competing product with TikTok, e-commerce, YouTube TV, a lot more sort of horizontal businesses, what Google's more accustomed to than taking on Hollywood. I thought it was really telling that Kinsel is leaving. Next year, Google announced his replacement is his ads executive, who is currently based in Northern California, not in Hollywood and LA.
Meantime, I want to get your thoughts on another developing story. Trump's Truth Social app has been blocked by the Google Play Store. What do we know from Google about why, and how has the Truth Social team responded?
Yeah, the latest wrinkle in Trump versus Silicon Valley. So Google's said in a statement that they only allow apps that have effective content moderation policies in place. Truth Social responded saying that they do, and that they deserve to be out there and have their voice. It seems like Google's sort of standing pretty strong in this. I mean, I imagine they knew it was going to be covered and have political ramifications for taking this stance. I mean, I think given how we first started, the irony that Google's imposing companies have strict content moderation when it wasn't too long ago when YouTube really struggled with this problem. But that is the benefit of I guess that's what Google can do when it's this gatekeeper to the most popular and mobile software in the world, as well as YouTube. So it shows, I think, just the power of these companies in critical ways, and it shows how much they've evolved in the past few years. I don't think Google would have made that position.
All right, a story we'll continue to follow. Bloomberg's Mark Bergen, thank you. Please pre-order Mark's book, like, comment, subscribe. It is out September 6th, and it is a riveting read. All right, coming up, AI research getting a boost. We're going to speak with Mark Raybert, founder of Boston Dynamics, about the new institute he will lead focused on the state of AI development. This is Bloomberg. Last year, Hyundai acquired a controlling stake in the robotics giant Boston Dynamics. Now, the car manufacturer is launching the Boston Dynamics AI Institute, a research-first organization that aims to spearhead advancements in artificial intelligence and robotics with a $400 million investment. Let's talk about all that and more with the Institute's executive director, Mark Raybert, also the founder of Boston Dynamics. Mark, great to have you with us. So obviously AI is one of the most powerful, promising, and potentially terrifying technologies invented in human history. What are your goals with this institute to confront that?
Hey, Emily, thanks for having me on. Robots have come a long way, but they still have a long way to go. Compared to people, robots are still pretty stupid. And it takes a lot of work to get them to do anything you want them to do, a whole fleet of programmers. So one idea of the Institute is to make it easier to tell robots what you want them to do. Could you imagine having a robot that can watch you perform a repair task or an assembly task and then have it understand what it's seeing and then figure out how to do it itself? Now, that's science fiction today, but I think if we make a diligent effort and get the right people and have a sustained effort, we can make robots that do that. And generally make them easier to use.
It's interesting that you say robots are still pretty stupid. We also recently interviewed a Google engineer who claims that Google has developed artificial intelligence that actually has feelings, that computers have feelings, are sentient. What do you think?
I think when people see the Boston Dynamics robots doing things like dancing or climbing or those physical things, they assume that they also have the intellectual capabilities of an animal or a person, and that's just not the case. I'm not saying there aren't some narrow areas where AI has made progress, but if you were here, and this is my home workshop, if you were here, I could show you how to do a task, and even if you didn't know how to do it, in 15 minutes you'd have no trouble having observed what I showed you, maybe done a little experimenting, and figured out how to do it yourself. Well, that's a long way from where we are now, where you need very sophisticated programming in order to make robots do almost anything that they do.
Google also bought Boston Dynamics back in 2013. It's been a long journey from there. Sold it to SoftBank. SoftBank sold it to Hyundai. What's it been like working with Hyundai at this stage of the journey?
Oh man, it's been great. You know, their chairman is very forward-looking, and he's got a team of execs who are really excited about making the future happen. You can see how great their cars are doing in the market. But I think one of their ideas is that they don't want to be an old-fashioned car company. Really, today you need computer science and AI and other new technologies if you're going to remain competitive. And I think both Boston Dynamics acquisition and the starting of this institute are a means of strengthening that element of what Hyundai is. So it's really been a pleasure.
Now, also in that interview that I mentioned with the engineer at Google, he criticizes and questions the power that Google has over all of this technology it's developing. Take a listen to what he had to say.
We need to start figuring out why Google doesn't care about AI ethics in any kind of meaningful way. Why does it keep firing AI ethicists each time we bring up issues?
Given your work with Google, do you think Google is asking the right questions about the ethics of the technology it's developing? And are all of these companies asking the right questions? Because there are companies around the world, including Boston Dynamics, developing artificial intelligence.
It's a company that size of any of these big tech companies have lots of different people with lots of different opinions. And I think that to some degree, the fellow we were just listening to, he was just one of many. I don't know the details about that, so I don't really want to judge. I'll say that it was a pleasure working for Google. We both at Boston Dynamics and at the Institute are going to have been paying attention to some of the ethics of these problems. I think having an open discussion about what the pros and cons are of automation and robotics is a good thing to do. We plan to have a group working on that. I'm not embarrassed about my own opinions about these things, so we're going to try and have an open discussion.
All right. Mark Rabert, Boston Dynamics, head of the new Boston Dynamics AI Institute. Mark, good to have you with us. We'll be watching your work. Coming up, how has tech changed the world of education in 2.5 years since the pandemic? Our EdTech series starts next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. It is the third back-to-school season since the pandemic upended how we work, live, and learn. We now rely on technology to learn more than ever before. And this week, we're taking a look at the intersection of innovation and learning. The number of students applying to U.S. colleges is in decline. Enrollment in 2021 was 20% less than it was in 2015, according to the National Student Clearinghouse. President Biden's student loan relief is just one example of the government's response to high tuition costs and growing debt. Meantime, companies are facing talent shortages, creating more demand for affordable and accessible education. That's helping companies like Coursera, which equips students with online skills and credentials for work. More than 5 million learners have registered on the platform so far this year. Here to discuss the future of education technology is Coursera CEO Jeff Maggioncalda. Jeff, thank you so much for joining us. So a lot to unpack here. First of all, talk to us about the trends you're seeing on Coursera and what that signals about changes in higher education and learning in the last 2.5 years.
Well, yeah, the world's been changing rapidly, Emily, and what we've seen is pre-pandemic, a lot of emphasis on learning digital skills. People realize there are new jobs with good compensation, but you need to learn new skills to do it. So a lot of emphasis on data science skills, technology skills, business skills. During the pandemic, we saw, like you said in the intro, a wholesale change in the way that people learn, mostly online, and also the way that people are now working, which is largely remotely. And so what we're seeing right now on Coursera is an increased interest in working adults saying, and it's a pretty tight labor market these days, they're saying, if I learn new skills, I can get a new job that pays better and has more flexibility. I could even work remotely a bit. So we're seeing a lot of interest in people learning skills to switch jobs.
And at the same time, you're seeing employers dropping requirements for hiring. And, I know we've been asking this question for years, but, people keep saying that the traditional 4-year college degree is dead. What do you say to that?
Oh, it's not dead. I think they're going to become much more accessible. So they'll be more affordable. They'll be more job relevant. We could talk a little bit how we're helping universities change the way that they provide college degrees. But the other thing I would say is they won't be the exclusive pathways to good paying jobs. Increasingly, there are great job opportunities in IT, UX design, project management, social media marketing that don't require a college degree. They do require skills, but you don't need a college degree to land many of these jobs, increasingly so. So I think you won't need to get a college degree to get your first good paying job, but college degrees will definitely help people continue to advance in their careers. At least that's our opinion.
So what are you doing to help colleges ensure students and potential students that it's worth it?
Yeah. Well, the big thing is, it's interesting. During the pandemic, what we saw is a lot of private equity and venture capital money go into ed tech. So we went public, lots of other ed tech companies went public and also raised money. So there's a lot more alternatives now to getting a college degree. College degree is not the only path to good jobs. And so universities are starting to say, hey, I need to create more flexibility, more affordability, more career job relevance in my curriculum. What we're doing to help is we work with over 200 of the top universities and 100 industry partners like Google and Meta and IBM. And we basically help universities offer industry micro-credentials, like these are like professional certificates in these entry-level jobs to students. So they're integrating these industry credentials into their college curriculum so that when you get your college degree, you also get a certificate from Google or IBM or Windows, Microsoft or somebody else.
Meantime, you've got this huge controversy about how the Biden administration has responded to the student loan crisis. Some people think this is great. Some people think this is not the way that the administration should have handled it. What do you think?
Well, I think it certainly reflects a huge and globally unique problem that the U.S. has had, over $1 trillion in student debt. And it's sort of say, well, how do we end up with $1 trillion? What it is students were able to borrow money to buy a fairly expensive college experience that did not land them a job making enough income to pay it back. And so your earlier question about how do universities need to change to create a better proposition for students. I mean, make degrees more affordable, make them more tailored to working adults who can't quit their jobs and move to a campus, but also make them more job relevant. So a lot of what we're doing is actually creating collaboration between industry and universities to help reinvent the college degree so that they're not so expensive. And when people get a college degree, they have a much higher chance of landing a job when they graduate.
So what are the trends that you're seeing that you think we're not talking about enough? Trends that we might find surprising?
I think everybody knows after COVID that people are now starting to do a lot more online learning all over the world. We had 47 million learners on Coursera at the beginning of 2020. 30 million more came during 2020, during the pandemic, and now we're at 107 million. So clearly there's been a big shift towards online learning. That's pretty well known. There's a lot of observations and I think some arguments about remote work. Will workers work remotely? What I think people aren't necessarily appreciating is the power of putting these two things together. Once anyone in the world has access to high quality learning and even college degrees online, and anyone in the world who learns these digital skills can start getting these jobs and working in these jobs, even if the jobs aren't in their cities or their states or maybe even in their countries, suddenly you have much more equal opportunity to learn and also more equal opportunity for good paying jobs. So I really think that maybe the legacy of the pandemic is going to be way more people in the world will become more educated and have a much better chance of landing a good job.
Meantime, obviously, we're going through a huge market contraction, but Coursera shares are down since you went public, as are many public companies in this economy. You know, we've long had this question, will investors see the benefit of ed tech and ed tech, quote unquote, companies? What's your message to investors? Why should they? Clearly the growth is there based on the numbers you're giving us. What's your message to investors?
Well, the growth is there. I mean, the message to investors, they already know this, but what everybody focuses on is how big is the market opportunity that a company's going after, right? Today, higher education globally is a $2 trillion market. There's about $2 trillion per year in tuition being spent on college degrees. Many people would say that there's a lot of room for innovation in college degrees to make them more affordable, more job relevant, more valuable to the students, no matter where you go to school, whether it's in the US or Europe or the Middle East or wherever. You know, what we need to show for investors to be excited is a very big opportunity that generates, you know, high revenue growth with predictability and then good operating leverage so that you become more profitable as you get bigger. And so what we've mostly been focused on at Coursera is growing. And to your point, you know, in Q2, we grew year on year 22%. Some segments of our business are growing much faster than that. But ultimately, we see this, we've been around for about 10 years. We see this as a multi-decade opportunity. We've been growing, you know, 59% year on year in 2020, 46% in 2021. We see a lot of growth ahead, and it's really going to come down to reinventing the way people not only get educational opportunities, but also how they get better access to career opportunities as well.
All right. Coursera CEO Jeff Maggioncalda. Jeff, thank you so much for joining us. Fascinating to hear your thoughts on all of this. Appreciate
Emily,
it.
thanks for having me.
Okay. Coming up, the potential of decentralized autonomous organizations, or you might know them as DAOs. We'll discuss next. This is Bloomberg. It's time now for our crypto report, and today we're taking a closer look at DAOs, aka decentralized autonomous organizations. Bloomberg Shanali Bosick, our crypto contributor, is here to explain. Shanali, take it away.
Emily, DAOs have a lot of purposes, but today I'm joined by Tekin Salimi, founder of DAO5 and former general partner at Polychain Capital. And what I'm curious about, Tekin, first is DAOs as it pertains to venture capital. There was some thinking a while back that DAOs can really transform the VC landscape, but this is at a time also when VCs have raised many billions of dollars for the crypto industry itself. How do you compete?
Yeah, so I think we're very much in the early innings of understanding how DAOs operate, nailing down all the specifics of DAO governance and making these functional entities. The space really began in 2016 with the first Ethereum native DAO. That now infamous experiment obviously ended poorly and result of a massive hack that also led to the fork of the network. The vision of DAO5 is actually to start as a traditional cryptocurrency venture fund in that we have outside LPs, we make early stage investments in companies and protocols in our sector, but in the future, we're going to convert the fund entirely into a DAO. And what that means is the future iteration of DAO5 will live and operate entirely on a blockchain.
So what does that exactly mean? Is the regulation going to be any different for a DAO like you, or even DAOs with other purposes?
Yeah, in terms of regulation, I think it's a constantly evolving landscape. One thing that gives me a lot of optimism is jurisdictions like Wyoming are taking a very positive stance, and I think more will follow. That's one area that we continue to kind of evolve our best understanding and best practices. But the core focus right now is on deploying the capital responsibly, getting the best possible assets into the fund, which will ultimately find their way into this DAO treasury.
I'm really curious also about not how regulators outside of these DAOs really look at how they operate, but how the DAOs themselves operate and any criticism they have from the industry. There's been a lot of questions, Tekin, about the governance and the way it changes. To the extent that governance needs to change, what are the biggest changes that need to be made in the next year or so?
Yeah, great question. I think there's one case study right now taking place and a live debate on crypto Twitter around the dissolution of Tribe DAO. I think this is going to ultimately form an important precedent and case study for our collective thinking on how corporate governance in these decentralized environments should work. So for a little context, last December, Fei Protocol, a decentralized stablecoin, merged with Rari Capital, a peer-to-peer lending market. And this was really the biggest DAO on DAO merger we've seen in the history of the crypto space, over $2 billion of combined value here. So this was a very happy marriage at the time, but things started to get sticky in April of this year when certain lenders on the Rari system were hacked and about $80 million of lender capital was lost. So fast forward to today, we're dealing with a very bearish environment. There's a loss of faith in this specific DAO, and the community has ultimately voted to dissolve the DAO and use the treasury assets to reimburse the stakeholders.
Well, not all DAOs are
However,
created equal also. I mean, there are other DAOs also. You were talking about the community voting. Some DAOs work such that some holders just have a bigger say. And so how then do you kind of fight back against the DAO, if you will?
Yeah, I think the underlying presumption and kind of the core ethos of crypto is this idea that code is law. And if you create a DAO where it's basically a simple majority vote, if you decide to do a big round and have a bunch of VCs and concentrated token holdings amongst whales, you're ultimately going to be subject to their will when it comes to on-chain governance. I think these are just things that the crypto community has to better understand over time. And we're still very early. Like, when you think of the history of corporate governance, public companies have had over many hundreds of years to get things right and frame our understanding of corporate governance and the law around that. DAOs have only been around for less than a decade.
We'll keep following. That's DAO5 founder Tekin Salimi. Thank you so much. Back to you in San Francisco, Emily.
Thank you, Shanali. All right, coming up, we're going to dig deeper into the future of EdTech, where we stand now post-pandemic from the investors' perspective. Jennifer Carolyn of Reach Capital with us next. This is Bloomberg. Let's continue our coverage of education technology now and explore the perspective from the world of venture capital. Funding to EdTech exploded in 2020 with $14.6 billion invested in VC-backed education companies globally. That momentum continuing into 2021. Where is it now? Let's bring in Jennifer Carolyn, investor and a former teacher herself, for more on this. So, Jennifer, Reach Capital was investing in education technology before most other VCs were investing in education technology. But then, of course, everyone jumped on the bandwagon during the pandemic. Where is that momentum now?
Yeah, I think the momentum is really strong still. So education's undergoing a lot of change right now. The pandemic accelerated a lot of shifts that began years ago. And that has awoken people to the potential of ed tech. And it's certainly become a much more attractive space for venture capital.
How would you say the pandemic has been a kind of inflection point for this industry? Obviously, we know that education technology was becoming more prominent, but it was happening slowly. Then it kind of accelerated very rapidly. Where are we now?
Yeah, so in K-12, we saw an acceleration of one-to-one device penetration in our schools, meaning that a computing device was used by almost every child now in our K-12 education. And almost all teachers are using computers for their core instruction. So this just ushered in a whole set of new software companies and digital curriculums and possibilities with remote tutoring that has really exploded the space. And then the global opportunity has also gotten much larger since the pandemic.
That said, the teacher shortage has gotten worse. How bad is it? And why isn't it getting better?
It's really bad depending on where you live. So the teaching shortage was in place, a decade ago, really, that people were sounding the alarm because the enrollment in schools of ed was significantly down. So about 35%. It's been down the last 5 or 6 years. So we knew that fewer people were going into teaching as a career. Now fast forward to the pandemic, and we had the Great Migration, the Great Resignation, and it has only exacerbated the teaching shortage. So it's really bad in states like Florida, California, Arizona, Utah, and so schools are really turning to pretty extreme measures to fill their classrooms.
What are those extreme measures?
They're loosening requirements on teacher credentials. So in Florida, for example, they're bringing on veterans that necessarily don't have to have bachelor's degrees to come into the classroom and teach. They are upping the pay, which is long overdue. They are increasing signing bonuses. They're recruiting teachers on social media, putting up billboards. And in some states, they are going to 4 days a week schooling to attract teachers. So, for example, in Missouri, about 25% of school districts are now going to a 4-day work week.
What concerns you most about this? I mean, obviously, teachers should be paid more. I think we can agree on that. But what concerns you about these other measures that schools are taking just to fill these spots?
Yeah, I think that right now the focus has been just kind of filling the classrooms with teachers. And I think that really every child deserves a quality teacher in the classroom. And without quantity, we don't have quality. So it is concerning that fewer people are going into teaching. I was a teacher for 7 years. I found it a really rewarding career, but also very hard. And I think that we need to really rethink about how we pay teachers. What are their working conditions like? What are the expectations for them? How do we respect them as a society? And to really elevate the profession so that we have a lot more people going into the field.
So how would you describe the state of the ed tech investing industry and where you're placing your bets given these evolving trends?
Yeah, so Reach has been investing in this space for more than 10 years, and our team has been together more than 15. And so when we first started investing in the space, there wasn't a lot of generalist VCs that were interested. And so there were very few ed tech funds. And now today, there's a lot more generalist VCs interested in ed tech because they see the potential here, the global TAMs and the large market size. So it's exciting to see that more investors are interested in this space. I saw that Andreessen Horowitz has an American dynamism practice, which is investing in kind of core American infrastructure like healthcare and education. And so these signals are very important to the space, and it's good to see more capital go into it.
You're also watching higher education and corporate learning. What's happening there that we're not necessarily talking about enough?
Yeah, in corporate learning, I think this although we're in a downturn market, the job market is still very tight. So businesses, corporations are looking to upskill their own workers, and so we are investing in companies that are supporting businesses to provide career progressions for their employees. So that's a really exciting space. And in higher ed, there's a lot of legacy software that's running the back end of colleges today. And we are investing in innovation in that space.
Meantime, there's a huge debate happening right now about whether President Biden responded to the student debt crisis the right way. What do you think, and how will the administration respond and impact higher education for years to come?
Yeah, so I think that the student debt forgiveness program that Biden passed, I personally was very excited about it. It's going to provide a lot of relief for those most at risk for default and those that are most financially insecure. It also targets the 1/3 of borrowers who have debt but no college degree. And then there's an equity piece here that I think is really important that hasn't been talked about that much, and that is that Black graduates owe on average $25,000 more than white college graduates, and Black families are more than twice as likely to be Pell Grant recipients than their white counterparts. So, this debt forgiveness is going to provide a lot of much needed relief for many people. That said, the rising costs of higher ed are just untenable for most Americans, and they continue to rise. And something needs to be done about lowering the cost of higher ed for sure. And so there's still going to be over $1 trillion of student debt out there, and it's still a major issue for many.
Something we'll continue to watch. Jennifer Carolyn, Reach Capital General Partner and Co-Founder. Jennifer, great to have you back with us. Thank you. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. This is Bloomberg.